Nimesh is in the house. Nimesh, I'm sure you've had a really busy last 24 hours, right? And you had alerted us about this in closing bell that, this could have perhaps started with one fund pretty much selling out. But this has just it's just going on and on. What's happening?
Surabhi, just to put into context what we're seeing, in the last 3 days, like Monday, Tuesday's holiday for us, Wednesday and today's trade. I guess Monday's fall was largely retail and HNI driven. And the volumes were on the lower side. So institutional participation was clearly not there. The first signs of institutional participation was yesterday. And we saw the number, right? 4,200 crores of net FI selling in the cash market. And yesterday there was a clear indication that maybe it was largely because one of the hedge fund wanted to, unwind a lot of their India position. So that could be one reason we saw a very large FI sell figure. Even in today's trade, the overall feedback is the volumes are on the higher side and the flows are on the negative side. So that shows the kind of momentum which is there on the downside now. Okay, so clearly, again, maybe, even in today's trade, you'll see a reasonably large FI sell figure. So that's the overall feedback. Initial feedback that I've picked up, it is in the first 2 hours of morning trade. The other problem is the technical factors. 19,250 was one big crucial support on the Nifty which got broken on Monday. Once that got taken out, 19,000 was a big level to watch out. I guess in today's trade, 19,890, sorry. That is a level to watch. We're still below that level. If that is not supported, maybe in the first half of today's session, you will see further selling in the broader market. So clearly, in the broader markets, there is capitulation now, and retail investors and HN investors are also now throwing in largely in the broader market. So that's the overall feedback. The other feedback that I picked up, at least in the initial morning trade, the feedback was there are lots of blocks being offered in the broader markets. And one of the large wealth managers seems to be offering a lot of blocks in the mid cap and small cap. So again, I don't want to sound a very alarming bell or whatever, but that's the feedback, right? And yesterday it turned out to be true that there was a large sell figure from the FI. So one needs to be very careful in the broader markets. Again, if you remember 2 days back, I did a dipstick survey with a lot of HNI investors on the overall fall in the market, and the consensus view was. We've rallied pretty hard. India has been the best performing market. So they don't want to buy the first fall. I think this is something which investors need to learn that, just a 5% fall doesn't mean that you should go out and buy the markets. Remember, India has been the best performing market. The mid-cap index was up 30% Y2D. And we had very strong rally in a lot of mid-cap and small cap. So I guess there is still a lot of time to go for the mid-cap and small cap. Maybe the stocks may not correct more, but there could be clearly, time correction from here on. But today's feedback, the volumes are on the higher side. The FI flow is on the sell side. As I said, one of the wealth managers seems to be offering a lot of blocks in the broader market. So need to watch out for that. From a technical perspective, 19,890 is the level to watch. If we don't sustain
18,890 is finished. That's the thing on the past.
Absolutely. So 18,890 is the level to watch. If that's not supported in today's market, then I guess the Nifty can test a 200 DMA, which is around 8,600 level. So that's the level to watch on the downside. But clearly, from a flow perspective, looks like it's a sell day and on good volumes.
Okay, got that. 18,890 is where you said we should watch it. We're currently around 30 points below that level. So let's see how things really move. But, that is the shape of the market right now, 1.4% lower. In the mid-caps, like we've been pointing out, that is where all of the pressure is really concentrated. So around 2.5% lower on the mid-cap index as well. We don't need to take a